Well, we were mentioning in our newscast new data from Stats Canada noting Canadian household net worth actually hit a record high, near $17 trillion in the first quarter. The higher stock market, certainly one of the helping hands, a rebound in the residential real estate market, also a helper. When it comes to luxury real estate, our next guest says that market is stable but getting stronger. Miles Nadal is a well-known Canadian entrepreneur. He's also founder and executive chairman of Peerage Capital, which owns Sotheby's International Realty Canada. And he's here to talk a little bit more about the world of luxury. Nice to see you.
Great to be here.
Certainly there's all sorts of real estate conversations we can have, but if Canadians on average, even if the headlines suggest people are feeling stretched right now, have more net worth than they ever have before, what does that mean in something like the luxury market?
Well, you've seen the Bank of Canada cut rates by 25 basis points, which we think is a precursor to probably another 50 basis points to 75 this year, another 100, 125 next year. So the tone is the friend of the buyer. There's no question. We had this conversation in 2023 internally, and we said, you have to survive till 2025. And the reality is we're seeing a pickup in both pricing and volume of transactions starting to accelerate. And as rates come down, once the U.S. starts cutting, that will probably be an impetus for the Bank of Canada to be more aggressive. And the reality is, you know, rates, luxury real estate and real estate overall is rate sensitive. But we're seeing great product have significant demand today in the luxury space, and we think that will grow. The condominium market is still soft, but we see that going to pick up significantly end of this year and strong in 2025.
And I would imagine that luxury real estate is a global game. The people with the means to be making those kinds of investments might have multiple homes. They might be shopping around the world simultaneously. How does Canada fit into that equation, in your opinion?
Well, the benefit that Canada has is we had 3.1% immigration, population growth. We have 1.3 million immigrants come to Canada, which is higher than any other place in the world. And as a result of that, they are feeding the growing demand for housing. And we don't see that stopping anytime soon. So we actually think that there is a demand-supply imbalance, and that will start to see itself in both volume of transactions and pricing in Canada, especially in Toronto and Ontario.
So you've got your pulse on the real estate world. You make a range of real estate investments as well. You actually partnered with a company, Ourborough, that their whole business is around supporting first-time home buyers. We talk a lot about first-time home buyers in an environment where it costs a lot to buy a home for a first-time home buyer, higher interest rates. How did that partnership come together?
So it was brought to me by our CEO, Trevor Maunder. Our family had very, very modest beginnings, and we never owned a home. And the reason why we never owned a home is not that we couldn't have afforded the mortgage and the operating costs, we never had the down payment. So when it was brought to me, I thought my family would be privileged to help create $10 billion of equity value for first-time homeowners. There's 2.7 million renters in Canada who want to be homeowners, but don't have the down payment. So in simple terms, we'll put up to 75% of the down payment required for a home. Call it $1 million home, you need $200,000. Typical Canadian has $50,000. We'll put up to $150,000 or 75% of the down payment. It's been a remarkable success. We've done $125 million worth of homes. We think that will be $1 billion worth of homes over the next 18 months. But we think it could be a $10 billion business, creating $10 billion of equity value for homeowners. And as you know, the home of a Canadian is the only tax-free investment they can make as their principal residence. So it's very exciting and very attractive to them.
And I think everybody's trying to find solutions for how home ownership fits into the equation, you know, especially if we're building more properties, but probably not at the rate that a lot of people would like to see right now in the country.
When we started it 3 years ago, it was tough to get, you know, mortgage financing for this. We now have CMHC as an investor. We have Leona, the labor union. We now have mortgage financing from CIBC, from EQ Bank, from the cooperators, also now hopefully from Bank of Nova Scotia. So we're seeing it become a mainstream adopted product because people want to solve the housing crisis and help people buy their first home.
Okay, beyond real estate, you are known as an avid collector, including everything from sneakers to cars. Last time you were with us, you were talking about a big auction that raised a lot of money. Can you walk us through what happened?
Well, it was a fantastic success. We partnered with RM Sotheby's and Sotheby's the Auction House, who are our partners because we are the largest operator of Sotheby's International Realty globally. It was a blowout success. We raised almost $95 million. It's about 25% more than we anticipated. You know, some things didn't do as well. Most did what we anticipated, but the top 20%, which is probably 80% of the value, world record results. I'll tell you two quick stories. Paid $500,000 for a Ferrari Daytona in 2012. We thought we'd get $500,000 to $700,000 US. Sold for $1,050,000. The Maserati Lamborghini Miura P400 SV. Paid $2 million, thought it would sell for between $2.75 to $3.5 million US dollars. Sold for $4.69 million. So world record pricing. So we were thrilled, and it will benefit our charitable foundation. And so it's few less things to focus on, and now the great things will have a home that people will enjoy them the way we have over the last 25 years.
And a reminder that luxury market, whether it's vehicles or real estate, has a lot of eyeballs.
I'll tell you one more thing interesting. Yeah. 1,000 bidders, 41 countries, and 40% of all the cars stayed in Toronto. So it tells you there's a lot of affluence in the city of Toronto.
Miles,